I'm JD Frost. Welcome to the Accountability Show, and we have a really special show for you today. And a topic that we're going to be talking about over the next 4 episodes is a financing package. And typically in this show, we talk about the what, the why, the how in each one of these different episodes. But what I'm going to do in this little series of the Accountability Show is we're going to be discussing the what, why, and how throughout these next 3 episodes. And we're also going to be discussing that in the 4th one, where we normally have a real life example. For financing packages, it's just important for you to understand all these different aspects of it. And it's hard to break down into exactly the how, the why, the what, and an actual example when you haven't even thought about it before, when you haven't even laid this out. So as an introductory, we're going to be talking about each one of these different aspects of it in each episode for the next 4 episodes. I'm switching it up on you a little bit. Because where I got this idea, and one book that I want to make sure that I give credit for all these ideas in these next 4 episodes, is Mastering the Rockefeller Habits. This is a book that you need to read as a business owner. It's incredible, and one of the habits is talked about in one of their chapters. It's called Chapter 13 of Mastering the Rockefeller Habits, and it's called Mastering the Art of Bank Financing. So when I was reading through this book, I took notes in this section more than I took in any other section of the book. And these ideas that they talk about as far as the art of financing, the art of bank financing, are extremely important. And this is something that you need to know as a business owner. So I've got basically 4 pages of notes that we're going to be going through. And, well, actually 5.5 pages of notes that we're going to be going through. So about 1.5 pages each episode. And I'm just going to go through each one of these notes and talk to you about why I wrote that down and why it was important and how it applies. Why in the world am I doing an episode on the art of bank financing is almost every business owner that we talk to needs financing in some shape, form, or fashion. They need to get a mortgage for their house, so they need a tax return done. They need to get financing for equipment so that they can go get that next job in order to make more money, in order to reach their goals. They need to get money quickly because they're in a bind. They got an extra payroll and they changed office locations, so they don't get their mail as quickly as they used to, so they need money now. Business owners, entrepreneurs, they've got to have money in order to fuel their business. And if you get really good at financing, if you get really good at utilizing debt, if you get really good at understanding how to communicate with banks, you can create more cash in your business. You can use other people's money more. So in this episode, talking about mastering the art of bank financing, how to get money for your company. How do you get money for your company? You've got to go to banks. That's the first place to start. That's the most traditional way to start. You've got to go to investors. That is a more non-traditional way, and typically you're going to have to give up equity in order to be able to get more money for your business. But the main thing when you are getting bank financing is to be able to tell a story. You want to have a presentation that knocks somebody's socks off. You want to have a presentation that tells the story of your business when you're not even there. The best business owners are the ones that can tell a story each time they are asked, well, what do you do? How do you do it? What difference is your business going to make in my life? And banks can get behind and support and finance that story. And they want to go based off of the story. And this is what frustrates me about banks, but it's just a fact of it. They want to go off of a story that's already happened. They don't want to go off of a story that is in the future or that's imagined. It's got to be a story that you have already been experiencing and that you can prove on paper. So one of the most powerful 3-letter words when you are mastering the art of financing, and I love this in the book, is ask. A-S-K. You're not going to get any money for your business unless you ask. You're not going to make any more money in your business. You're not going to be able to finance that piece of equipment if you don't ask. Okay? So when you are sitting there talking with a bank, don't just talk to them about your business and that's it. You got to ask them and know what you need before you go into that meeting. It's very, very important. So there's really no magic in acquiring capital. There's 3 P's that you need to remember in acquiring capital. And I'm a living testament to this: preparation, presentation, and persistence. Preparation, presentation, and persistence. When you are asking for capital, you have to be prepared. You have to have your financial statements in order. You have to have your tax returns in order. You've got to have your executive summary of your company in order. You got to have your AR aging in order. You've got to be prepared to hand them documents whenever you can, or whenever they ask for them. They've got to be ready. When you're going to ask a bank for money and they ask you for your financial statements and you can't produce those within 2 or 3 days, you're not ready. You're not properly prepared. When they need your bank statements and you can't produce those the day of, you're not ready. You're not prepared. You've got to have all of these statements. What we've been talking about in these prior episodes, the financial statements, income statement, balance sheet, it's got to be up to date. I recommend reconciling your income statement, reconciling your balance sheet, reconciling your cash account at least weekly. They've got to be ready, so you got to be prepared. Your presentation, the second P, presentation is everything. Don't just talk to the banker over the phone. Go to the bank, talk to the banker, talk to the people that are the decision makers there. Get them to know you, establish a relationship. This is somebody that's going to be a partner with you in your business for a long period of time. Whether they're an equity partner or not, they're still a partner because they're loaning you money. So part of this is your presentation. How do you look? Are you well dressed? Do you have a coat on like I do right now? Are you presentable? Is this somebody that they will want to invest in? It's very important. The third thing is persistence. Persistence, 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 persistence. You don't give up. You don't give up ever. When you need money for your business, you will find it. There's tons of money in this world. There's money all over the place. You just need to find the right people. That might not always be a bank. It might be a private lender. It might be your neighbor. It might be an angel investor. It might be private equity. Who knows? But you've got to be persistent. If you believe enough in what you're doing, you will get it financed. There will be somebody that you will tell this story to, that you'll be prepared for, that you will present well to, and they will finance part of your business. It's very, very important. In the VIP Investment Club, we've got $30,000 that's available for small business owners. It's amazing. We've been advertising this. We only had 4 people apply. We had only 2 people that actually submitted videos. 2 people decided not to submit a video. I don't know why, but that's one of the requirements. So they're not going to get the money. So were they prepared? I don't think so. The ones that didn't have the videos, their presentation was off because they didn't have a video anyways. And let's see if they're persistent. If you have those 3 things, you will get money into your business. You'll get money into your life. If you're prepared, you have good presentation, and you're persistent, you will eventually make more money. You will use other people's money. That's what financing is using other people's money to accomplish your goals. So, very, very important. There's opportunities out there. Preparation, presentation, persistence. So, there's 4 levels of risk that banks analyze, okay? Very important for you to understand this. There's 4 levels of risk. There's transaction risk, there is industry risk, there is the borrower's financial position risk, and there's quality of the collateral, okay? So they analyze each one of these 4 different areas, and if you have them all covered, then you will most likely get your loan. This is part of being prepared. So the transaction risk is basically just the risk of the sold transaction, just the sake of actually them handing you money and you receiving them money within the economic outlook at that point in time. That's the transaction risk. Right now with COVID-19 going on, there's not a lot of loans happening because there's a lot of transaction risk at this time because the banks aren't really sure about the economy. Business owners aren't either. It's difficult to go get a loan right now because of this level of risk. The second one, industry risk. This is going to be related to the bank that you're working with. You might actually have better options with a local community bank than you would with a big bank, and I'll tell you why. The community bank will probably know you. They'll know your industry. They'll know who you are as a person. They'll know your character, and that will help. They'll also know the industry that you're in. Most bigger banks, they only work in specific industries. So if they've filled up their tank, their loan tank per se, in construction, and you're in the construction industry, if you go to that specific bank, you're probably not going to get the loan because they're at too high of a risk within their portfolio of loaning that to that industry. So that's a risk that you have of not getting your loan because of just specifically the industry that you're in and the industry that they're loaning to at that time. The third risk is borrower's financial position. This is judged by your character. It's judged by your actual technical financial position, and it's judged by your credit score. So if your credit score is not right, if it's not in a good position, 700 or higher, I would say, then you're going to have a difficulty overcoming that risk from the bank's perspective. Also, your character. Do you know your banker? Do they know your kids? Do they know your family? Do they know your life? Do they know the story that is being told? That is going to affect the borrower's financial position, and that is one of the four risks that banks are analyzing, 4 levels of risk that banks are analyzing. When you're trying to go borrow money and your credit score is below 700, one of the first things you need to do is fix your credit score. Don't worry about going to try to borrow money without fixing your credit score. So make sure that that's already above 700. The fourth risk, quality of the collateral. How much do you need? How much collateral do you need with your loan? That's very, very important. Collateral is the assets that are going to be used as the offset to the cash that you're going to be getting from the bank. So if you can't prove enough collateral, you might need to go get a co-borrower that can sign on that debt as well with you. That will allow you to provide more collateral for the loan. So I just threw a lot of information out at you. This is the mastering the art of bank financing. And these key points are the ones that you need to remember most from this episode. The 3 Ps: preparation, presentation, and persistence. There is no magic in acquiring capital for your business. If you have proper preparation, proper presentation, and persistence, you eventually find that capital. I hope you like this episode. I appreciate you watching the Accountability Show. Next week, we're going to be talking more about the art of financing. We're going to be talking about the different advisors that you need to get into your business. We're going to be talking about what you actually need. What does the strategy really look like in mastering the art of bank financing? Please, please, please subscribe to the channel, like and share, turn on the notifications so that you know when a new episode drops, and we'll see you on next week's episode of the Accountability Show. Thank you so much.